What's up, everybody? I hope you are all having a good day today. We are about to dive in the housing crisis and me explaining what exactly is going on. I wanted to start off by saying, everybody, thank you so much for joining. These live streams have been epic with over 400 people joining us every single Saturday, and hopefully this one as well does very well. Now, in this video, I'm sharing with you all first-hand experiences. I'm a real estate agent. I began investing in foreclosures, buying and flipping them and renting them. Then I accidentally became a real estate agent. I'm working on a couple of developments right now on over 15 acres, also commercial real estate agent. What I do is about 80% commercial real estate, 20% residential, but I started in residential real estate before I became a realtor, so I have a very good scope of that business. I flipped over 40, 50 properties to date. I've been in real estate for about 6 years. I love it. I love talking to you all about real estate, and I love and appreciate every one of you who comes out here, supports, clicks the like button, subscribes, and gives me their feedback and comments. We got so many people in the chat already. What's up to everybody who's in the chat? What's up to everybody who's watching this video after? And let's get jumping right into it. Now, one thing I want to let you all know is that two things, actually, not one thing, two things. Number one, if you're enjoying and getting any value, hit the like button. And number two, if you don't know, I officially launched a Discord where you can go and actually join, where we talk daily about real estate, money, and business. Daily. You lose nothing joining it. It's for free, and you can chat with us, and you can get quicker responses from me on there. So make sure that you guys check it out. Now, guys, if you can see me, hear me, everything looks good on your end, please let me know. It's showing me over here that the connection is a little weak, so I want to make sure that it's not for you guys. If it is, I'm sorry. Nothing I can control. Maybe I just got to fix my Wi-Fi, even though I got the fastest speed. But it's whatever. Okay, so everybody who's joining, drop down what state you are from. If you're from Texas, if you're from California, from Florida, from Kansas, wherever you are, drop it below, and let's see how many people we have and where we have everybody at. We got Bobby coming in, AZ, Michael, Pablo, Jesse, Diego. Awesome. Okay, we're just going to dive right into it. Guys, if there's anything on your end that you feel you can't see or hear me on, please let me know. Shows connection's weak, but can't do much about it right now. So I'm going to be explaining to you guys why exactly is the housing market doing what it's doing. I'm going to tell you everything that I see, the things that I'm experiencing, the things that I see, the things that I read. And remember, if I don't know something, I don't share it. If you ask me a question and I can't answer it, I tell you I can't answer it. In fact, I go and search for the answer to help you if I can, but ultimately I don't tell you I do something unless I actually do it. So hopefully that gives you all more confidence and gives you guys excitement when you ask me a question, because if I answer it, more than likely I've experienced it. Now, there's a couple of factors and a couple of things I want you to all know about. Number one, we have all-time low inventory records. What this means is that there's not that many houses on the market. So you might be looking for a house that you really want. And you're like, I want it to be 2,500 square feet, 4 bedrooms plus an office, 2.5 bathrooms. I want a big backyard. I want some nice landscaping, curb appeal. I got to be in a good neighborhood. Now you want that. But there's only one of that in the city that you want that. And then there's 50 other people who also want that. So now you're telling me there's one house, 50 people want, it has all the specs that they want. What do you think is going to happen? You're going to expect that the prices shoot up. You're going to expect that there's a bidding war, competition. You know, when I was in the auction buying foreclosures, we always had bidding wars. In fact, my first house that I ever purchased, listen to this. I went to the auction and I had, I believe, $100,000 or $120,000 cash, something like that. And before you jump into it, it wasn't my money. OPM, other people's money. So I was using an investor's money, and I took the risk on that money because I believed in myself. I was 18 years old. So I went to the auction to buy a house. And this house starting bid, this house starting bid was, I think it was $65,000. And I was like, this is a steal. Now, I went to all the houses that were going to foreclosure, I went door to door to them about a couple days before the auction actually started. In this specific door, it had a note on it. And that note said to call this number. And it was freshly taped and nobody opened it. I was the first investor who opened it. I open it. It says call this number. I take the paper. I dip. Now I knew 100% this house was going to foreclosure because when I called the number, they told me. And we tried to clear things up. And there was stuff in the house that they really wanted to keep, so I helped them out with that. Long story short, I started paying $65,000. I bid it on the house. Going once, going twice, and boom, I didn't get the house. Somebody raises their hand and bids me from $65,000 all the way up to $105,000. Now, I bought it for $105,000. I think my first flip, plus or minus, I profited about $21,000 net. I grossed maybe $35,000. So I profited $21,000 net on my first house flip. And that was at $105,000. Imagine if I was able to get it at $65,000. How much more profit? That's over $60,000 net profit my first house flip. I share that with you to let you know that there's competition in the auctions. Now there's also competition in the housing market. Everybody is fighting for that one house because it's pretty, it's the only one available, and everybody wants it. And that's what we're dealing with right now is number one, we got low supply. And when you got low supply, guys, things aren't easy. When you have low supply, too much competition is going around. So that's the first thing. We got Chicago, South Dakota, Cali in the house, New Jersey, Big Blade, Gilbert, Arizona, Cali, Virginia. Wow. That is awesome. Okay, so we got a bunch of you guys. Okay, now, number two, we got high demand. Now, what does high demand mean? It means that one house that you like, everybody else likes, and it means that they're going to overpay for that house. And what that means is that the next house that sells in that neighborhood, it's also going to be overpriced. And actually, it's also going to be able to be comped by an appraiser, which means it'll also appraise at that new value. So the house is worth $300,000. Somebody pays $350,000. Now all the houses that are the same like that house will now be worth $350,000. $50,000 up in the neighborhood. Now, as you guys could see, that's what's causing the house prices to go up. We then have low interest rates, all-time low interest rates. I was locking in rates for clients at 2.5%. I locked in an investment property 30-year fixed loan at 2.7%. Wow. Literally a year and a half ago or 2 years ago, we were locking 30-year fixed rates on primary residence at 5.8%. I've done them for my clients. 5.8% compared to 2.7%. That's a big difference. Pull the calculators out and start running that. So we got low interest rates going on, and that's a huge factor on motivating people to buy. When rates are low, it's done on purpose to stimulate the economy to make people spend more. When rates go up, they try to cool down the economy because it probably got too hot. What we're dealing with right now is it's way too hot and rates are still low. So long they stay low, so long the market will stay hot. What's up, Boise, Idaho? Awesome. Okay, so we have that going on. Now we also have something called mortgage forbearance. This is basically stating that you don't have to pay your mortgage at all for 3 months, 9 months, 1 year, whatever you agreed. You don't got to pay it. You got to pay it back, but as of right now, you don't have to pay it. Now, what this is causing is people who are supposed to default or get foreclosed on, not default and not get foreclosed on. And what that means is if they're not getting foreclosed on, there's a huge market that is not getting created, which are foreclosures. Like I told you, there is a big market in foreclosures, and that keeps the market stimulated with buying a house from the foreclosure. You rent it or you sell it, but it happens quick. When you buy it, you fix it, you remodel it, you put it on the market for rent or on the market to sell. And that's not happening right now because foreclosures are in the picture. You then have a lot of other stuff going on, such as an eviction moratorium. What this means is you can't evict the tenant who's in the space, who's in your house. Even as a landlord, you're not collecting rent, you can't evict them. The problem that we're dealing with, guys, is that you can't evict the tenant who's not paying you. And then not on top of that, you can't take them out the property because they're not paying you, but you can't really do anything about it in general. Now you can't sell the property because no one's going to want to buy it if a tenant's not paying. You can't do much with the property if the tenant's not paying, but you still got to pay property taxes, property insurance, property maintenance, and you're not collecting rent. So this eviction moratorium actually literally March 31st, 2021, it was a deadline. 2 days before the deadline, they then extended it once again, after extending I think twice already, to June 30th, 2021. So they keep on extending it, and who knows how long it's going to keep on going, and how many more months will this keep getting delayed. Now, if you watch the channel, you know that I always talk about the markets being delayed. We have these moratoriums, we have these forbearances, we have these helicopters dropping trillions of dollars. It's just delaying the market from a reaction of what it should be reacting to, and that's the problem that we're dealing with. Now, guys, stimulus packages. Over $5 trillion in stimulus money. $5 trillion. The first one was $2.2 trillion. The next one was $1.9 trillion. The next one was $900 billion. Not in the order of that, but over $5 trillion practically was given in stimulus money. This is giving unemployment benefits. This is giving straight checks to people. This is giving so much assistance to so many different industries. But guess what? This is just floating the markets. Now I'm sharing this video with you to tell you about the housing crisis we're in, and then explaining to you exactly why we are in what we are in, because of course the pandemic hit, and then all this is now happening after it. So this is delaying the market from its reactions, and it's really causing a bubble in what we're seeing specifically in the housing market. It's creating a bubble that's causing everybody to overpay, to panic, to FOMO, to quickly want to buy, not realizing that if the market goes back 5, 10, 20%, it could hurt. I'm going to give you guys an example right now. If you have a calculator, you might want to pull it out. If you don't have a calculator, you might want to pay more attention. So listen to this. I got it written down right here for y'all. Interest rates are a huge factor in real estate. For me as an investor, the rate has to be good for the deal to make money. If the rate's not good, I'm not going to cash flow good. If I don't cash flow good, I'm not going to buy the deal. Period. Now, we have right here, if interest rates go up, will the housing market decline? Look at this example. A $300,000 home at 2.8%. 300K home at 2.8%. Your monthly mortgage is $1,233. $1,233. If you got the calculator open, you can run the math on that. Now look at this. This is at 2.8%. Do the other side. A $300,000 home at a 5.5% interest rate. The monthly payment, the monthly mortgage is $1,703. The difference is $470 mortgage payment only. Every month, you will pay $470 every single month more if the rate went from 2.8% to 5.5%. So people who are buying houses right now, they maximize something called a DTI, debt to income ratio. They're maximizing it. And usually there is not that much room after buying a house. You might have $50 left in debt, $100 left in debt, if lucky. So based off of these numbers, if an interest rate goes to 5.5%, your debt to income, your debt will raise $470 because your new mortgage is more expensive. That'll wipe out a whole market. What that will cause is that $300,000 house will now be worth, to get the same monthly payment at a 2.8%, which is $1,233 a month, $1,233 a month. If you want that same monthly payment, you can't shop for a $300,000 home anymore. You only can shop for a house up to $217,000. Do you guys see the difference? That the interest rate being 2.8% gives you a 300K home. The interest rate giving you a 5.5% gives you a $217,000 home. This is to tell you that if the rates go up and people in this market, they're buying the mortgage payments, they're not buying a house. They're buying a mortgage payment. If they want to buy a mortgage payment when the interest rates go up, they're going to have to dip down their house price from 300K to $217,000. If you're watching this video and getting any value, please hit that like button. I would really appreciate it. We got a ton of you guys on this live stream. Hit the like button, and I need some help from you. If you're watching this video, what's $300,000 minus $217,000? If you can comment it below, please, let me see what that number is. $300,000 minus $217,000. If somebody can do that math for me real quick. I know I can do it in my head, but I don't want my brain to get a brain fart, like they call it, because I got more I'm trying to talk to y'all about. So give me that math real quick, whoever's on here right now. We got over a couple hundred people, so I know that we can get this answer very quick from you guys. We got Florida in the house. What's up? All right, we got a lot of questions that I'm going to jump to, but let's get this going first. Now, I asked for $300,000 minus $217,000. You guys are pretty slow, so I got the answer. It's $83,000. The difference of the house you can buy is $83,000 if the interest rates go up. Now, when you ask, is there going to be a housing crash? If rates go up, supply starts to pick up, demand kind of flattens away, what do you guys expect? We're not saying 2008 is going to happen, but we're saying that there is opportunity and potential, depending on the markets, for the prices to retrace. And guys, if they retrace, then you're going to see what you're seeing. A $300,000 home today was really worth $230,000, $250,000 before the pandemic. So even if a $300K home dips to $250K, the reality is that's what it was worth before the pandemic. But we've overpaid during the pandemic. Thank you all. I just got 4 people giving me the $83,000 number. I appreciate it. Maybe next time it'd be a little quicker than me, but still, thank you so much for that. I appreciated that. All right, so we wrapped up with talking about the housing crash, talking about why the housing crisis, actually talking about why what's happening is happening. And I'm going to jump in right now and let me read what you guys have in the comments, see if I can help you out. Any questions you guys have, any ideas, thoughts, message them down below in the comments. This is why I go live, to talk to you guys personally, so you guys don't have to wait for my responses in the comments. And guys, if you're getting any value, I'd love to see the like button go up. Please, if you get value, hit the like button. It's free for you. And of course, it helps me a lot. And most importantly, link below. Join the Discord channel. We talk real estate, money, and business daily. I want all of you there. Join the Discord channel. I created it new. It's fun, it's exciting, and we're on there daily. So join that and check it out. All right, question time. Let's go. Let's see what we got. The recent $1.9 trillion stimulus package includes nearly $10 billion of direct financial assistance to help homeowners pay not only their mortgages, but also taxes, utilities, insurance, and homeowners. That's correct, but let me tell you something. The exact reason why they extended the eviction moratorium is because they have so much rental assistance and so much housing assistance in this package that they want to disperse it to all of those people who need that help. Now, I understand that this help is there to help them, but also the landlords who've been struggling, who aren't getting that help, or who aren't actually reaching out to get this, or not understanding it, or maybe foreign and don't know it's even there, they're affected and they're tired of this market. They're tired of not collecting rent. So that in itself is a problem. Max says, what are your thoughts about current housing bubble, burst, correction, new reality prices for properties? I don't know if there's going to be a crash, a collapse, a bubble, but I do know one thing. I do know that if rates go up and supply goes up, then the prices will have to cool down. And you can call it a crash if they go down $50,000, but the truth is, it was never priced at that right number. It was overpriced, so it just comes back to its normal number. So it's just balancing itself out. How quickly can we see the crash after these extensions stop? You might not see a crash. You might see a crash. And if you do see a crash, it's not going to happen in 1 month. I'd say at least 3 to 6 months, just until things process, because there's so much going into play right now. AZ says Toronto, Canada dynamics are the same. That's interesting. I hear people saying the UK is also the same. I pay the landlords with crypto. If you're a landlord collecting it in crypto, that's cool. Tennessee in the house. What's up, crypto? Tennessee. Selling my home in Maryland now. Going on the market end April. Wants a 5-bedroom, 3-bathroom, 2.5 bathroom, 4,483 square feet. That is a massive house. Wow. Remember, Rahil says, when will feds increase interest rates? I heard 2024. The feds are saying 2022, 2023, 2024, 2025. They just say their agenda is to keep the markets calm. They can pull up tomorrow and say, hey, we just decided that we actually got to raise them tomorrow. They're not going to do that because they don't want the market to completely collapse. But they're saying a couple of years until they raise them. But they do what's best for their agenda. Jane says, do you think the eviction moratorium will be extended past June? I think so. If the money hasn't been dispersed like they're saying, there's a possibility it will, and it's been getting extended since September to December to March and now till June. Stefan says, my brother just bid it on a house about 2 weeks ago. It was $285,000 and he was outbid by $20,000 to $30,000. I'm seeing it. I'm putting offers for my clients $50K over and we're not winning. Jane, when do you think we will see a 5% 30-year fixed rate? I don't think we'll see it anytime soon. I think we'll see it in a couple of years, though. It'll come back. Andy, what is up? What's up? What's up? Can you explain how lenders keep their cash flow when there is forbearance? Lenders are getting forced to give forbearance to the homeowners, right? But they're getting back-end help from so many different markets, from so many different avenues, from the government itself, from the president himself, from the stimulus packages itself. Banks don't give out no free money. And on top of that, banks have big reserves. They know they're going to end up getting their money back, so if they got to tap into that, they do. Michael, best time to sell in Cali? I'm thinking this summer it will be a fire market. In Cali, how is Cali market right now? I know millions are moving, but I still know that it's a hot market over there. Max, Canada, UK, Australia, Germany, you won't believe it, but the same thing goes on with real estate. Just crazy. Wow, that's impressive. Eddie says, have you noticed any kind of slowdown in sales in your area? I live in Miami, Florida, and I see houses lasting a little longer on the market. Eddie, at this point, I'm in Dallas, Texas. No slowdown. In fact, it just gets hotter and hotter and hotter. Dallas, Texas, and Texas in general has been booming, so it could be a good point on why. But overall, it's on fire. All right, guys. Thank you all so much for watching. Make sure if you got any value that you hit the like button. I appreciate you all for taking your time on a Saturday to come watch this live stream, for being loyal, for being here. Any value that you got, if you enjoyed it, had some fun with us, please hit that like button. Right now, we got 50 likes. We got 1 dislike. I don't know who that person disliked, but he's probably still watching or she's probably still watching. Try to flip that to the like section. And if you guys enjoyed it, let's get as many likes as we can. We have almost 200 people on this live right now. I think we can get at least 100 more likes before I close out. And most importantly, join my Discord. Link is going to be in the bottom. Check it out. Join it. Because, guys, on there we talk daily real estate, money, and business. And I don't get why you wouldn't be a part of that. If you guys want to know about real estate, money, and business, you should join it. I'm putting right here. Join me on Discord. I just dropped it right there for you guys. Click that link. Join us. It's an invite from me to you for free. And jump on that and let's chat. Anyways, guys, thank you so much for watching. I upload 3 times every single week, Monday, Thursday, and Saturday, which is live on Saturdays. So we'll be able to always talk about what it is that you guys like. Anyways, guys, thank you so much for watching. I'll see y'all in the next video. And for right now, I'm out.